This is Matt from InvestiQuant. Today is Friday, May 15th, 2020. And this morning, I'm kind of excited to share something with you because I learned something new as I was digging in to discover this morning. And in fact, what I want you to do is I'm going to show you this pattern here that developed yesterday. And I want you to type into the comments on YouTube what you think the bias is. I want you to do that before I run the test. So type that in, pause this video if you need to, but I want to see what you think the results of this test is going to be before I show it to you. So here's the pattern. We've got this chart where we've pushed up, we've kind of consolidated, then we've sold off. On Wednesday here, this red candlestick was the lowest close of the past 10 days. So we got a pretty sizable sell-off here over 2 days. Yesterday was Thursday. We gapped down. We took out yesterday's low, and then we put in this strong reversal candle here. We've got a big range day that closed higher than the prior day. Didn't make it an outside day, but it had a big, strong candle, and this morning we are gapping down. And that's the pattern that I'm going to test, is after making a 10-day low, you get a green candlestick that makes a lower low and a higher close. So I want you guys to type into the comments down below, what do you think the bias is, long or short after that, if we gap down? We are looking like we're going to gap down this morning. So type that into the comments. Pause it now if you need to. Type it in. This will be at least fun for me to see if I am the only one who was completely surprised by what the results showed. So let me set this up. We'll look at it in all four instruments here this morning. This is set up as a long at the open, 9:30 a.m. Eastern Time, exiting at the close of regular trading hours. The opening filter we're using is gap down. The price pattern is what I just described to you, which is an up day following a 10-day low close. It has a lower low and a higher close. And I'm not going to put above, below 200-day moving average because it really doesn't matter on this pattern. I looked at both ways before I showed this to you. And then I'm going to hit view results. Go ahead and put those comments in there. I really want to see what you think. And here are the results. So the ES 42 samples, NASDAQ 54, YM 46, Russell 62. And 3 out of 4 of these are pretty weak the next day. So ES 36% win rate, NASDAQ 41, YM 43, and Russell 53. So that one's a bit more neutral. But this pattern historically has been pretty weak when gapping down the next day. I would not have guessed that. I figured this was showing a bullish reversal candlestick that was going to get some follow through the next day, even if gapping down. And that is not the case historically. So don't know what it'll do today, but historically this has not favored the bulls. You know, there's an interesting difference here if we were to make this an up gap, and we'll dig into that some other time as this video is getting long. But hope you enjoyed that. Perhaps you learned something new like I did this morning. Good luck today, and we will see you next time.